Just like all of our webinars, we're going to have a lot of people participating this morning. We will do our best to answer questions in groups, so please use the Q&A function for that. We'll try to lump those together where we can answer them generally. It'll be really challenging for us to answer everybody's specific question about your specific business, but we will try to address all the questions as they come in a general format. We will continue to direct you to our website, pnfp.com/PPP forgiveness. We are continuing to update that with the latest information. I know Lane's going to go over some of the FAQ information that came out late yesterday. We've got that document up on the website. We also have the calculators up on the website and all the information that you'll need to get ready for forgiveness when it opens up. If you have any questions and you want to have a specific conversation about your business and how all of this applies to you, we encourage you to have a conversation with your financial advisor. And I think you'll hear us talk several times today about the importance of including your CPA and maybe even an attorney in this process, because all of this information is really specific to the individual business types. So we're going to try to share what we know with you this morning and do in a very general format, try to answer some of your questions, and hopefully you'll walk away a little bit better prepared for forgiveness when it opens up. So Lane, I think that covers everything. Good morning, and thanks for spending some time with us today.
Good morning, Brian. It's good to see you.
Always good to see you. So like I said, we did get some new information and a new FAQ from the government yesterday. So maybe that's a good place to start the conversation this morning on what did we learn, and is there any additional information that we gathered since the last time we had a webinar?
Well, there's definitely some new information that we've gathered, and I think this FAQ did a really good job for anybody that's questioning how to calculate their payroll costs, how to calculate headcount reductions, what you can actually calculate and include in your payroll calculation. The SBA really tried to break that down specific to each individual business type, because I think that's one thing to note, is that depending on what type of business you have, whether you're a sole proprietor, whether you have a general partnership, whether you have an S corp, it's a little different for each one of those entities. And so you need to be cognizant of those things when you're filling out either the long form that the SBA put out for forgiveness or the EZ form. Either one of those forms, you're going to have some different inputs depending on how your business actually is organized. And so they really did a good job, I think, of kind of clarifying some things for us around whether you use the alternative payroll period or if you can include money in there for a payroll period that maybe started right before your forgiveness window. So whether you use the 8 weeks or the 24 weeks, if you started your 8 or 24 weeks in the middle of a payroll period and you paid out that payroll during your forgiveness window, the SBA is still saying that you can actually include that in your forgiveness numbers. But it has to be something that occurred mid-payroll period. So it's not to say that you can include paying payroll that happened prior to your forgiveness period. So say like 2 or 3 months before your forgiveness window started, it would be a payroll period that kind of straddled your window there of when you started. Another thing that they clarified, and I've had several questions around this from individuals that own multiple businesses, they definitely went back and clarified that if you are a business owner that, say, owns 4 or 5 different businesses, you can only receive PPP forgiveness on whatever that maximum calculation is for you. Whether you're using the 24 weeks or the 8-week window, your max is only a one-time. It's either going to be 20,000 or around 15,000, depending on which one of those windows you use. But you can't get that 20,000 or 15,000 for each business that you own. It's a one-time calculation per individual across all businesses that you own. And so that's something to note, because that's going to be something when you go, you probably received the maximum amount of money for each one of those businesses. So you would have a little left over that you can either spend on other payroll or other business expenses, but you can't hit the owner's salary for each one of those individual businesses that you own. So it's good that they kind of clarified that. They also clarified for people, because we had a lot of questions around, I typically in my business use a 30-hour week as a full-time week versus the 40-hour that SBA. So they gave some guidance on kind of how you go back and qualify that. That's not saying that you automatically, because you use a 30-hour work week versus a 40-hour work week, that right off the bat you're going to have a reduction in head count. You just need to go back and calculate your payroll as a 40-hour work week. And if you have the same amount of employees as when you applied, when you asked for forgiveness, you should still be okay and not have a reduction in headcount. So they really drove home that unless you truly had a 25% or more reduction in headcount, you should be able to use that EZ form and still get full forgiveness. And so it was nice that they really clarified that, because there were some loopholes there that made us think that there might be some instances where you had a maybe 10% reduction in headcount, but it still deemed you, so you didn't get full forgiveness. So it's a really good FAQ. I highly encourage people. We have it out there on our Pinnacle website, and then you can also access it from the Treasury's website as well. But very similar to the application process, you see it gets fine-tuned and better as we go along. And so even though the SBA is saying they're going to go live on August 10th with their application process, we don't see or feel the big need for people to rush to get in their applications, within that first week of them opening up that window. We anticipate that some of these kinks will be worked out, and that if you probably wait a few weeks or even wait a couple of months to apply for forgiveness, the process will be even more fine-tuned and will be simplified more, that will hopefully maybe free you business owners up to where you're not having to work on a big heavy application and put the hours into what's out there right now. They're even saying, so there's the fourth round of stimulus that's out there right now. The House and Senate each have different bills that are being proposed, but both pieces of legislation include something that would allow for blanket forgiveness for business owners that have a PPP loan of $150,000 or less, and then potentially kind of tiering the requirements for loans that are under 2 million between that 150. So, say you have a loan of 150 to 350,000, you would only need to give us X documentation. And then for over 350, you would provide a little bit more. So kind of tiering the requirements for forgiveness based off the loan size. And so I think a lot of our clients, Brian, I'm sure yours are the same way, but most of mine that I did fall into that 150 or less bucket. And so if those guys can hold off, they may not even have to come and apply for forgiveness at all. They may just get blanket forgiveness if one of these pieces of legislation gets passed.
Yeah, I think that's all good info. And again, you'll probably hear us hit this several times. Continue to check our website, pnfp.com/PPP forgiveness. It's got the FAQ that Lane has referenced. It's got calculators and information, and we're going to do our best to make sure that our clients are equipped and ready for the forgiveness application process when it opens up. Lane, we've already had a couple of good questions, and I do think it's helpful maybe if you would spend just a few minutes before we jump into the calculator and talk about some of the changes that have happened since the PPP program rolled out, and what are some of the changes, being able to move from an 8-week period to a 24-week period, and the percentages of what is required for payroll use versus non-payroll expenses, and just some of the things that have changed around the program since it initially started back at the end of March.
That's great, Brian. I think, I stay so in the present of all the current changes, and it's really good to look back, because some of our business owners that are now finishing their PPP funds, they may not even have been aware of some of these changes that happened over the past 4 to 8 weeks that we've been dealing with this. So just as kind of a recap, so now with the PPP funds, it started out that you had to use 75% of it on payroll expenses. Well, they dropped that to 60. So now you only have to use 60% of the funds on payroll expenses. And then you can use the remaining 40% on interest expense, lease payments. The main reason Congress did that is because a lot of businesses were saying that Yes, payroll's a big expense for them, but honestly, their lease payment could sometimes be more than their payroll, depending on their location. You may have a retail shop that's in a really high rent district. They may only have 2 or 3 employees, so payroll may be the second largest expense, and the rent expense is the first biggest expense that they have. And so that was a really nice change for those business owners, being able to count more of those non-payroll related expenses. Another change that you mentioned was going from the initial 8-week window period, and you can still use that 8-week window period. And a lot of our clients have opted to still use their money within that initial 8 weeks. And in fact, when they made the change from the 8 weeks to 24 weeks, some people were already done with their 8 weeks at that point, so it didn't really even apply to them. But if you didn't have your funds used within that 8-week window, you are able to use them over a 24-week window period now. And so that really helped business owners that weren't operating at full capacity, and it just didn't make financial sense for them to bring back their full staff when they couldn't even open their business at full capacity. And so now that window is in place, that you can use the funds over the 24 weeks. We are getting questions from people of, do we need to come to the bank and ask to be able to use the 24 weeks instead of 8 weeks? And we don't need you guys to come to us and ask for that. That's just kind of an automatic. But when you do fill out your paperwork for forgiveness, you do need to note in your paperwork and let us know that you're using the 8-week versus the 24 weeks, because that will change the calculations. Another change, Brian, and this change you do have to come to the bank, and the bank has to mutually agree on this change. And that is, if for any reason part of your loan does not get forgiven and you have to pay it out as an actual loan payment back to the bank, initially that had to be paid back over 24 months. So a really quick 2-year payback period. They extended that to 60 months. So now the business owner has 5 years after their forgiveness to be able to pay that loan back to us. And so that change does have to occur as a note modification that we would have to do here at the bank. So it is important that once you apply for forgiveness, and if there's going to be a portion you have to pay back and you want to utilize that 60-month payback period, you need to get with your financial advisor here at Pinnacle, let them know that, and then we will go through the process of doing a note modification for you to allow for you to pay it back over that 5-year window instead of the 2-year window. So those are some highlights there. There were also some clarifications on some tax issues. We did a webinar that we participated in yesterday with LBMC, which is a local CPA firm, and they also had some attorneys participate. And it was really great to hear from the CPAs and the attorneys' perspective how some of these changes are working out. And we're hoping to get even further clarification from Congress on some of those tax implications, because depending on how your business is organized, it's not as easy as just saying that your loan, the PPP funds, are not taxable. Depending on what type of organization you have, whether you're a sole proprietor, a general partner, or a corporation or an LLC, you're all taxed differently. And so it's very hard to make a blanket statement like that, like Congress made, and it easily be applied to all of those different types of organizations that are all taxed differently under different tax structures. So more to come there on the taxation issue, but I do firmly believe that it was Congress's intent that these funds not be viewed as income that's taxable, but making that happen isn't as easy as waving a wand in Congress and saying they're not taxable. So there's tax codes that are out there. There's different ramifications legally and tax-wise that have to be taken into consideration to make those types of changes.
Yeah, I know. And a lot of the conversations that I've had with CPAs over the last few months, we're all kind of feeling the same pain of following the bouncing ball as things change and as more information comes out, because it impacts all of us. It impacts us on our side of processing these loans, and then again processing the forgiveness of them, and it's going to impact the CPAs come tax time next year when we try to figure out how to make all of this work together. So it is important to have a good team around you. Continue to have conversations with your financial advisor here at Pinnacle, but also have conversations with your CPA and attorneys to make sure that you really do understand how all of this impacts your specific business. I know, Lane, a couple of questions have come around processing the application for forgiveness and when does interest begin and those types of things. So just to clarify, interest really did begin accruing on these loans from the date of funding. However, there's no payment that's required of our clients until they've gone through the entire forgiveness process and understand if there's any liability to them at all on the backside of this. Is that correct?
That is correct. No, that is really great to know, because we've had people want to come and make interest payments to us already and those sorts of things. And if you get full forgiveness, you get full forgiveness of your principal and interest, every interest payment that's accrued since day one. So there really would be no need for you to pay down the loan. There's also still some question marks out there of when we apply for forgiveness. If you happen to have made a payment, SBA may only forgive whatever the current balance is on the loan. So they may not actually take into consideration what you had paid previously, and you get that money back as true cash, because that's not really how the program was operated. The program was put in place to pay the banks back and pay down the loan. So there's really not a mechanism for us to then be able to give that cash to the borrower. So I'm really cautioning some individuals have wanted to go ahead and make payments on their PPP loan, and that could dollar for dollar subtract from their forgiveness amount when it goes to SBA for forgiveness. So if at all possible, I just wouldn't, there's really no need for you to make a payment on your PPP loan right now, unless you just honestly know you didn't use the money appropriately and it will not get forgiven. So you have a loan. In that case, you're more than welcome to start paying it back. But if you feel like you're still going to be eligible for the full forgiveness, there is really no incentive whatsoever to start making payments on that loan. And when we apply to the SBA for forgiveness, and that gap between when we apply and when they send us a check, the check that they pay the bank will include every day of interest during those periods. So there's no fear there that you guys would get stuck holding the bag for a couple of days worth of interest that would be out there. The SBA is saying they're going to calculate in even that window of when you apply for the forgiveness and when we submit to SBA for that forgiveness. They're including the interest, like you said, Brian, going all the way back to the very first date of disbursement on the loan. So there's really no benefit to making a payment to us right now on these.
Yeah, one question I know we've gotten several times, and we'll hit this and then jump into the calculator. I know Monica has asked, so if they chose the 24-week period, but they utilized their funds before the end of that 24-week period, do they need to wait until the 24-week period is up to begin the forgiveness process, or once they use all of their funds, can they jump in and begin the application for forgiveness?
That's a good question. And they actually did, they kind of, so I caveat this, they did answer that in the FAQ. And so it was good that they gave us clarification around that. So in Monica's instance, let's just say Monica used the money over a 12-week period and she opted to use the 24, and she wants to go ahead and apply for forgiveness right after her 12-week window is up. She is more than welcome to come do that at the bank and apply for forgiveness. Now, when she signs the certifications that she has on the forgiveness application, as it reads right now, I think that they hopefully will get an update to this, so this isn't the case, but as it sits right now, Monica would be certifying that even though she used the money in 12 weeks, she opted to use it over 24, and she will not have a headcount reduction for the full 24 weeks. I don't necessarily think that's what Congress intended there, and our lobbyists through the NAGLE Association have been actively lobbying to get this clarified. But that's important to remember, that you can apply for forgiveness at any point during that 24-week window, but just because you apply for forgiveness in that 24-week before it's up, before the end of the 24 weeks, you're still certifying that you wouldn't have a headcount reduction until the end of that 24 week time period. So it is possible that if you got full forgiveness, let's say in week 12, like our example, Congress could come back or SBA could come back and review your file just to make sure you truly, after you got your forgiveness, you still didn't have a headcount reduction until the full 24 weeks is up. I don't think that is what they intended. I don't think that will end up being the final ruling, but as it sits right now, Brian, you know, like you pointed out, it's ever changing, and if we legally want to go by what the documents say right now, legally right now they're held to not reducing headcount, that they're certifying they won't reduce headcount for the full 24 weeks.
Yeah, and I think that's just another great point. We do understand, we're having conversations with clients all the time, especially clients who've already utilized their funds and are very anxious to get their loan forgiven so that this can be in the rearview mirror and they can move on with life. But in this particular instance, it really is going to make some sense to maybe just sit and wait and let this play out a little bit, to make sure we understand all the rules and all the changes and how everything works. And to your point earlier, if we think back to the early days and when this program rolled out and all of the technical issues with submitting applications to the SBA and getting those approved and through the system and all of it, there were some issues in the early days of the program. And I don't think it's unreasonable to think there potentially could be some technical issues as the forgiveness application process gets started too. So again, maybe just give it a few days or even a few weeks for the process to begin, and then jump in and make sure we understand all the rules and regulations to go on with the forgiveness process.
You are very right. Just hold tight. But I think that's a good lead way for us to maybe take another look at the easy calculator that we've put together that goes along with the easy application. So if our buddy Joe Bass could maybe pull that up for us. There it is. So with this new FAQ that was put out there, Brian, they did kind of make some clarifications on how to fill out that form and, you know, what lines apply where. I think it's still important for people to remember you're going to need your payroll records to fill any of the forms out, whether it's the long form, easy form, unless they just do a blanket forgiveness. We are going to need your payroll document. So whether you use ADP, if you use Paychex, any sort of third-party payroll provider, we've seen that they've been able to put together some really good information that you could literally just dump into this calculator. ADP, Paychex, some of them even have their own calculator, and those are great, and we're really excited that they put those calculators together. But we do, as the bank, part of the certification from the bank side, just so you know, you guys know as the customer out there what the banks have to do, we have to certify as the bank that we also validated those numbers. So even though your payroll provider provided us a very nice spreadsheet, we're still going to need it input into the Pinnacle form, because then that meets the requirements for us as the bank that we validated, and we also double checked and triple checked those numbers to make sure those payroll calculations were correct. But Brian, you and I kind of talked briefly before we got started today, but you know, the number that you're going to be looking at for cash contributions is that gross amount when calculating the true cash contributions, and then you can apply your health benefits and your retirement benefits and stuff like that in addition. And so if your payroll documents don't include that information, you'll need to go gather your health information and the retirement information. But just for clarification, it's the cash contribution for the employee for their payroll, the gross portion you can use. When you're considering the health benefits and the retirement benefits, it's only what the employer is contributing. So it doesn't include, let's say, you know, me at Pinnacle, I contribute to my Pinnacle 401k. It's not including what I contribute as the employee into that retirement. It's only taking in what the payroll provider, what the employer puts into that retirement plan and puts into the health benefits. So I think that's a good clarification for people to have there when they're filling out these forms. Another thing that they wanted to drive home when you're using the 24 weeks versus the 8 weeks is so owners payroll will be capped at $20,833 if you're using that 24-week window. And if you use the 8-week window, it would be capped at the $15,385 number. So those are some good numbers to keep in mind. And if you use our calculator, or if you use another calculator that's been put in there, most of them have that cap already built in so that you couldn't accidentally include more than that. Because it's not to say that you can't pay an employee or you can't pay yourself more than $100,000 a year, but it's saying we're going to cap it as far as the forgiveness goes at those two numbers. So that has been some confusion out there, that some people have assumed that they can't pay themselves their normal salary of more than $100,000 a year. You definitely can still pay your employees, pay yourself at more than $100,000 a year, but when you go and input it into these calculators that we have, it's going to cap that number as far as the forgiveness period goes, so that you'll only get forgiveness on those two numbers there. So just trying to go through some of this here. So Joe, is it possible for you to go over to the first schedule on that spreadsheet that has the payroll? There we go. Okay, perfect. So if you'll notice on this spreadsheet, that's where I was talking about. The owner's draw is the top part, and then the employees' contributions are at the bottom. And there are some nuances when calculating in the owner's compensation. So depending on what type of company you have, whether you're an S Corp, you're a C Corp, you're a general partnership, what you can actually get forgiveness on is going to be a little different. And so it'll be important when you're filling out this form that you make sure you pick the correct type of entity that your organization is structured under, and then that will formulate the correct formulas for how to calculate the maximum forgiveness on your owner contributions. Now, the employee contributions will be the same across the board for all companies, but where we get into the nuances, it's going to be how your company is organized on the owner's contribution. So for instance, general partnerships are calculated differently than how an S Corp is calculated on the forgiveness portion for the owners. So that's something good to keep in mind when filling out those sections there. Seasonal employees, they also kind of clarified that in the this FAQ, and I know we're getting a lot of questions about seasonal employees because unfortunately COVID kind of hit where we have a lot of businesses that are seasonal businesses that just operate during this particular window of time. And so it was nice that they clarified that for the seasonal employees, you can use a 12-week period beginning May 1st of 2019 through September 15th of 2019 to kind of calculate what your payroll is, because a lot of businesses operate during that window. That's their heavy business period, and their business may drop off during other times of the year. And so in order for them to be able to keep their employees paid and get the maximum forgiveness, if you're a seasonal type business, you definitely want to use that 12-week period for how we calculate what the maximum forgiveness is going to be. For the FTE reduction that's in the table 1, it also gave some clarification on, there was a lot of questions out there on when I'm calculating my full-time head count, do I include employees that make over $100,000 a year? And the SBA said, yes, you do. But what we definitely want to qualify there is those are employees. Those aren't the owners. So when you're calculating the FTE, you're not including the owners in the head count. You're only including your full-time employees in that head count calculation. But that should be the same way you did it on the front end. And if you didn't do it on the front end, we can go back and fix it. That would be how you would calculate your head counts on the front end, so that then when you apply it on the back end, there shouldn't be any difference there. So those are a few quick things to note when actually sitting down and filling out these forms. Another thing to note, Brian, and I'm sure you've kind of worked with people on this, is collecting all of the stuff for the non-payroll related expenses. And so SBA has clarified in the FAQ a little bit around the non-forgiveness ones. So they definitely went back and highlighted. I know, Brian, you've gotten this question and I've gotten it a lot. What is transportation expense and what can be counted as that? And so in this FAQ, they went back and they told us what transportation expense is. And I don't think it was what a lot of us were thinking was transportation expense. So it is what, when you fill out your tax return, what would qualify on there as, let's see how they stated it on here. It is, transportation refers to a transportation utility fee that is assessed by the state and federal government. So that is different, I believe, than if you're paying a gas expense for your employees, you know, mileage expense and that sort of thing. So that was good that they clarified that. I don't think that was the clarification we were hoping for there. So that really limits what transportation expense is. And then they went back and reiterated on utility bills, that those utility bills had to be in place by February 15th of this year in order for them to qualify. And so when you're giving us documentation for your utility bills, you'll need to include your February utility bill so that we can see it was in place on the 15th. And then you would also include the utility bills that you're wanting to count under the forgiveness. So any questions, Brian, that you've seen out there kind of around some of those non-payroll expenses?
No, I think one of the questions that I saw addressed in this FAQ was about the interest on loans. So maybe, Lane, if you want to talk about what can be included in terms of loan payments through that period and what can't be included. I know there was some question about unsecured debt and interest on unsecured debt. Just maybe go over what can and can't be included on that. And then I know when we get done with the calculator, we're going to go over specifically the documents that people will need to provide in addition to the application and the calculator.
Definitely. No, that was another big kind of clarification for us on what is actually qualified under interest expense from the government's perspective when filling out this. And so they said interest payments on mortgages and real personal property, so such as an equipment loan, an auto loan that the business had, the interest expense on those can be included in your PPP forgiveness. But what they did say that interest on unsecured credits, such as a line of credit, credit cards, those are not eligible for forgiveness. And so that's I think a little bit of a change from how a lot of people were possibly interpreting the interest expense charge. So it's only interest expense on fixed real property. So it's got to be an equipment loan, an auto loan, or a mortgage expense on a building for that interest to actually be eligible to be included. So can't include interest expense from lines of credit and those sorts of things. So anything that's an unsecured loan. So even if you use, which I know because we deal with business owners every day, business owners may use their line of credit to go buy a piece of fixed property, but the bank doesn't have a lien on that, and it's still an unsecured loan in essence out there. And so unfortunately, that would not qualify under these interest expense unless it is a fixed loan for real property.
I think that's helpful clarification, Lane. Joe, if we can go back to the payroll aggregator tab 2, I know there's some questions, and I know I've gotten this question from some people, and we've got it here in the session. If the owner of the business is technically a salaried employee of the business, is there still a need, Lane, to separate them on the owner line of the calculator, or could we just include them down in the employee compensation area with everything else?
That is a good question. And Brian, I honestly don't know. I would want to talk to one of our kind of tax experts to see if that really matters or not. My gut instinct would be to say to keep all owners under the owners, because even if they are, if you're, for instance, you have a C corporation, and so the owner is still taxed out as an employee, gets a W-2 under the corporation. we still want to make sure that we delineated that this was the owner versus this was an a regular FTE. So I would think we would still want them in that owner section, but I tell you what, let's check with our experts here at the bank. We have some wonderful resources here that can maybe help clarify that for us to make sure we're putting those into the right bucket, and we can get back on our next video webinar that we're doing either tomorrow or Friday with some clarification there.
Yeah, I think that's helpful. And again, it's a great point to make that we're going to continue to do these webinars. We do have one scheduled for tomorrow and one scheduled for Friday. We'll continue to put these out on our YouTube channel, Watch PNFP. If you just go to YouTube and you search Pinnacle Financial Partners or Watch PNFP, you can find all of our webinars there. And again, all this calculator, the form we're about to go over for the documentation and what you might need to put together, it's all out on our website at pnfp.com/PPP forgiveness. So these documents are available. The videos are available, so you can go back and watch that, because we understand it's confusing stuff and it's ever changing. So it's good to continue to check that for information. Lane, is there anything else you want to cover on the calculator before we move to the document guide that some of our people here have put together for us?
You know, just really actually want to give a shout out to Dana Sanders and Aaron DeMarco. So they created these wonderful resources for us. And I know people get to see my face and your face kind of as the, you know, salespeople out there interfacing with the clients and dealing with them every day. But Aaron and Dana really have been working long hours behind the scenes, actively involved with every step of this PPP process. So just want to give a big shout out and thank them for all of their help. They have really been the ones that have been putting together these tools, staying on top of all the legislation, and they're the real reason that Pinnacle, I feel like, has been able to do a really good job clarifying the process and helping our clients through it. It's because of people like Aaron and Dana that are, you know, putting these resources together and making our job a little bit easier as well.
Yeah, we'll also give a shout out to Joe Bass, who is the brains behind all of these webinars that we're doing, and the website, for putting what Dana and Aaron put together in a way that's understandable for all of us to discern and understand how it applies to us. So we're very thankful to work with some pretty awesome people.
Yes, we are.
So one of those documents that they put together is kind of a quick reference guide. So we'll take a look at that. And what they've been able to do is break out for each individual business type the specific documents that we know that will be necessary to go through the forgiveness application. So let's take a quick look at that, Lane, and maybe walk through it for our participants so that they know, hey, here are the documents that we know you're going to need to go through the application process.
Awesome. So this document's the one that you guys see on your screen. That's the blue and white one. And I am absolutely in love with this because I've had a lot of these questions myself. You know, so say I'm a sole proprietor. What document do I need to start filling out my PPP application for forgiveness? What payroll information am I going to need? And so literally Aaron broke it down per every entity type. So we can just kind of go through it quickly. So if you're an independent contractor, the payroll documentation that we're going to use to calculate what portion of your payroll is forgivable is going to be from your 2019 Schedule C or your 2019 personal tax return. So that's how we're going to come up with. It kind of goes back to the beginning, Brian, and I think this is good to mention. You may have applied for the loan in March. The SBA fine-tuned how to calculate your actual loan amount after people had applied and already gotten their loan. So there may be some little bitty changes to that. What we are going to do when the banks look at it, we're actually going to go back. We're going to validate the number that you received on the front end using the final calculation that SBA put out there. And they actually didn't even put out the final calculation until 2 weeks ago. So most people were already done with their PPP loans, have already gotten their money and spent them by the time SBA actually gave us the final calculation for how to calculate your loan amount. So we're going to go back with this information to calculate the loan amount on the front end, and then that in turn is also the number that we would use for forgiveness on the back end. So they should all jive with each other. You know, it shouldn't be any different from how the loan amount's calculated on the front end versus how the forgiveness amount's calculated on the back end. But these are the documents that would be required from a payroll standpoint so that we can calculate those numbers correctly. So for sole proprietors, and this is probably the one that Brian, you and I get the most questions on, is we're going off the Schedule C. There's no exceptions to this if you're a sole proprietor. So unfortunately, if you're a sole proprietor and your Schedule C shows that you had a loss in 2019, unfortunately, that means we can't give you a loan amount. We know that that may not have been a hard loss on paper, but that may have been for taxation purposes. But unfortunately, this is the guidelines that SBA has given us as to how we calculate the PPP loan amount and the PPP forgiveness amount. So that's important to note that they did clarify that for sole proprietors, we're using your Schedule C income. For LLCs, if it's a single member LLC, we're going to be using their 2019 Schedule C. Otherwise, we're going to go use the LLC requirements that are for partnerships below. And for partnerships with an LLC, we are going to start using hopefully they have third-party provided payroll records. Those are always going to be the best. We can use the cash compensation paid for those, or we would go back and you would have to have really detailed bank accounts that show where you made partner draws so that we can track that money. We can also use the 2019 K1s, and off the K1s, we would use that line 14A. Or we can use tax forms that are put together by your third-party payroll provider. And these are what we would really prefer if you can get your hands on them. The 941s would be the best document for us to use for that, because you've got to remember this is a government program. They want to use the payroll that you paid your payroll taxes to the government on. So if we can get our hands on those, that's going to be the best document for us to use. We can still use canceled checks, account statements, stuff like that if you fall into this category, but just know those documents are going to have to be very detailed in order for us to count them. There can't be any questions as to how that money was spent. Nonprofits are going to fall into the same bucket. Most nonprofits are, incorporated typically. So they're going to fall into hopefully having those 941 payroll documents as well. But if not, we can use receipts and canceled checks and that sort of stuff. I think that really hits all of those in that bucket. Then they kind of outlined on here the non-payroll related and what documents would be required there. And so I think these are really important to note that on the mortgage interest one, we briefly talked about that, Brian, but it's only the interest expense. So we have to have some sort of document on that loan that separates out the interest expense from the principal expense. Some people's monthly statement does that, some of them don't. So if they don't, we're going to need an amortization table that shows interest versus principal. If you have a loan at a bank, most banks can give that to you pretty easily. So this may be things that you just have to go ask your local bank for. But we'll need that, and we'll need then the corresponding statement. So say we paid May and June's interest expense. Well, then we need a May and June statement, and then an amortization statement or a breakdown of the interest and principal on each one of those to count it for interest. For the lease agreement, we need a copy of the lease. And so Some people may have a lease that's on the back of a napkin, a handshake agreement. We've got to have a lease in place to count that lease agreement. So you're going to need to go put a formalized lease agreement in place. It needs to have been in place by February 15th. So if you've never really had a formal lease, you're going to go want to put one in place that backdates it to when your lease actually started. And then we're going to want to see copies of canceled checks or an ACH debit. However you paid that month's lease payment, we need to document that in addition to documenting that lease and that lease having been in place. And then if your landlord does provide you some sort of monthly statement, we're going to want to see that as well. So let's see here. I'm trying to scroll through this little spreadsheet. The next one is the business utilities. And so that's going to be important that once again, you're documenting that you had the utility as of February. So we're going to want an invoice from February of this year, along with the invoices for the covered period that you were paying. So whether you paid June, July, whatever months payments we're including, we're going to need those statements as well. And then we also need to match that up with the payment. So that's going to be the bulk of the documents that you have to put together there. I mean, when you look at it on this form, Brian, I don't know about you, but I think it does a really good job of kind of simplifying it. And to me, this just doesn't seem that overwhelming. I mean, I know it's going to take maybe a little bit of time to gather all your ducks in a row, but I don't think this is that much information for business owners to be able to gather and collect and put into these forms and scan over to us as the bank. And we're still fine tuning our process here at Pinnacle, but once SBA goes live, give us a couple of weeks to get our process fine tuned, but we're going to have a great electronic platform that you guys will be able to go out and get those applications over to me and Brian to start processing for forgiveness.
Yeah, I think that's great, Lane. It's also probably a good time to talk about the timing of the forgiveness process. So am I correct in saying that once our client submits their forgiveness application to us at the bank, we've got a 60-day window to review that to get to the SBA. Then the SBA has an additional 90 days after that to review it. So we're talking about a process that potentially could take several months. So maybe that's a good expectation to set on the front end to understand that this could take some time to actually go through the actual forgiveness process.
It will. It's not going to be, on the front end, it was very fast and furious. We thought this money was going to run out, so we were trying to process as many applications for the actual loans as possible in a short, amount of time. The forgiveness process is much longer, and having that webinar yesterday with the CPAs were really encouraging business owners. There's really not this big rush to get out there and apply for the forgiveness component right away, with the one caveat of if you are anticipating having any change in ownership or change in control in your business, we are highly encouraging people that they apply for forgiveness first. And just so you guys know, we will probably also process those as banks first, because those are going to be the ones that you really need to get those change of ownerships done after the forgiveness has already been received, because standard SBA loan documents have in there on every SBA loan, and the PPP loan is no different. If there's a change in ownership, that triggers a default in your loan, and that would put your PPP forgiveness at jeopardy. So if you as a business owner are having any sort of change in ownership or change in control, you definitely want to try to wait until after your forgiveness has been done to make those changes. We know that there will be some times where that just can't happen. And if that's the case, you want to get with your banker as soon as possible. We can actually go apply to SBA now, not for the forgiveness component because that's not open yet, but we can do some paperwork to submit to SBA for them to approve that change in control. But just so you guys know, that typically takes SBA 2 to 3 months to review those and approve them. So it's not a real quick process, but that's just the general process that's in place right now with the SBA on any change of ownership. But that being aside, if your business is just humming along, you're not having any changes in control, change in ownership, you're just keeping things as they are right now, there's really no rush to apply for forgiveness. These loans are on full deferment till the end of the year. So, you don't have any payments or interest that's going to be due. I would wait, Brian, like you said, to see what changes Congress makes to this program. We may get that blanket forgiveness, but there's really not a big rush to come back to the bank and apply. So what we're hoping and what we're envisioning is that when the SBA portal goes live on August 10th, um, fingers crossed, I say that because SBA has said that potentially they've already kind of warned us that might be delayed. Just so you guys know, they are using a third-party vendor themselves through a SaaS-based software that this company helped write specifically for PPP forgiveness. It's brand new to SBA. It's brand new to anybody. It was literally just created by, I think it's Goldsmith CRI is the name of the company that SBA is contracted with, but they will be administering the PPP forgiveness process through a brand new software that they've created. And like anybody that knows software development, to roll out something as quickly as they have, there's going to be some kinks that we need to work out. And so they're hoping that it goes live on August 10th. It may not. We're going to have to see how that software interfaces with the banks and their software. So there's going to be some testing even after it goes live on the 10th, because it may not work the same across the board depending on the bank software and how those two communicate together. It's going to allow for us as a bank to submit individual applications or even submit batches. So we could submit like a batch of 100 forgiveness applications all at one time using this software, but we've still got to work out the kinks. So, Brian, we're really advising people to wait until possibly, end of August, once it's had several weeks to kind of run its course and get tested. I don't know about you, but I don't necessarily want to be, the test dummy. There's definitely going to be some that want to get in there and get it in right away, and they'll be our test dummies for this. But if you can wait, there's really no rush. Once we actually get those forgiveness applications in, the SBA has 3 months to review them and get back to us. So they still have a pretty big window there where they can review them and send the money over. So there will be a gap in when you as a business owner apply to Pinnacle Bank for your forgiveness and when SBA actually sends Pinnacle Bank the money so that we can pay off your PPP loan. So I just want people to understand that even though they apply for forgiveness, it's not like when you come to the bank and you pay off a loan, it gets credited that day and voila, you're now at a zero balance. This will take some time. We'll definitely notify you when those payments come in, and we will notify you if for any reason you don't receive full forgiveness, so you can go ahead and be planning on your strategy for how you want to repay your PPP loan and whether or not you want to go and elect to use the 60-month payback window versus the 24-month payback window.
Well, Lane, I think this has all been really helpful. And I think what we want to continue to communicate to our clients and people that are here watching today is that we're going to try to continue to share information with you as we learn it. So as the SBA, as Treasury continues to put out additional guidance and information, we'll jump back in these webinars to try to share them with our clients. We would direct you to our website, pnfp.com/PPP forgiveness. That's where all the documents that you'll need will be. That's where all of our guidance will be. So Joe Bass and the communications team has done a wonderful job of kind of putting some bullet points out there for you to know and understand to have you ready. If you want to go back and watch this webinar or any of the previous webinars, you can go to YouTube and search Watch PNFP and find all of our webinars there. We've actually got a great one with a CPA that talks about all the tax implications of the entire CARES Act. So it's not so much focused on the PPP, but all the other ins and outs of the CARES Act and how it impacts business owners and individuals. So we would certainly direct you there. But understand that what we're trying to do is take the information as it comes out. Lane does a wonderful job of communicating in a way that we can all understand it and understand that we're going to continue to put that information out there. We encourage you to have conversations with your financial advisors, with your CPAs and attorneys to understand how all of this information impacts you specifically in your business, and understand that we're going to be here to walk through it with you. We are going to go ahead and wrap up. Lane, thanks for your time today, and I guess we'll do this again tomorrow, right?
Yeah, and I just encourage people, tomorrow will be pretty much the same things we went over today, but Brian, you and I both will kind of compile those questions that people have and hopefully get more clarification and have some better answers to some of those questions that people had today.
Yeah, I know before we kicked off the webinar today, we were having a couple of really in-depth conversations on some specifics that we just weren't sure about. So yeah, we do encourage you to tune into all of these webinars, because as information comes out, we're going to continue to share it with you. So we're thankful that y'all spent some time with us today. We hope it's been helpful, and we look forward to talking with you again soon. Have a great day.